Hello and welcome to the Intentional Brief, your weekly video update on the one big thing in cybersecurity news for middle market companies, their investors, and management teams. I'm your host, Shay Colson, managing partner at Intentional Cybersecurity, and you can find us online at intentionalcyber.com. Today is Monday, April 21st, 2025, and we're continuing to monitor a bunch of cyber news as we try to distill out what's important. So I'm going to flag some follow-up items up front here, and you can pull the articles from down below to read the full brief. But these are things that are happening that are important, but they're not important enough to cover in this week's show. And that includes things like Insight Partners formally confirming their January cyber attack, Yale selling $6 billion of private equity investments in the secondaries markets for the first time, partially to address the funding challenges posed by the cuts from the current administration, a whistleblower at the National Labor Relations Board with some interesting details about Russian activity on their network after some Doge changes that were made, including some technical details and a retaliatory note on his door with drone dog walking pictures, and President Trump revoking security clearance for former CISA director Chris Krebs, who has since quit his job at SentinelOne to fight back full time. Despite all of that, we've got more pressing news to cover this week, and that is in the form of the demise or not of the CVE database. So if you've missed this kerfluffle over the past week, I will help recap briefly here. News broke midweek last week that funding for the Common Vulnerabilities and Exposures database run by MITRE, more commonly known as the CVE catalog, would end on Wednesday, the day this news was initially reported. As we know, funding cuts continue from the current administration, and they're impacting everyone from higher education to CISA, and the CVE program was caught up in this process as MITRE holds the contract with the U.S. Department of Homeland Security to operate this program on their behalf. The problem here, or the challenge, is that the majority of vulnerability and remediation efforts, particularly for large enterprises and government agencies at all levels, local, state, and federal, rely entirely or extensively at least on these CVE ratings to help determine severity of a newly identified vulnerability and then triage the level of urgency needed in response. This function is actually particularly helpful because of both the volume of vulnerabilities being discovered and the technical depth and research required to accurately determine or even estimate the severity of any newly identified vulnerability. To give you some context here, in 2024, there were more than 40,000 CVEs recorded, or one new vulnerability about every 13 minutes. 24 hours a day, 7 days a week, 365 days a year. And the rate of discovery is increasing, rising in 2024 39% from the numbers in 2023. Now, before you stop this video to go run and overhaul your vulnerability management approach, I will say that the CVE work at MITRE was given an 11-month reprieve, an extension on its funding before the end of the day on Wednesday, so we did not have any interruptions in this service. But I think that's small comfort, especially when other information sharing mechanisms like ISACs have already had their funding cut and are no longer a reliable source for this sort of information. So where does this leave us on the middle market side? We'll have to look, I think, for other ways to triage severity, whether that's from vendors in our vulnerability scanners or from our own research or determining our own impact in terms of likelihood and impact to generate a total criticality score. While we wait out the next 11 months of funding, which again is as far as we can see down the track, it's a good opportunity to revisit your policies and your procedures around vulnerability management to see if and how CVE data plays a role in supporting your vulnerability management function. Look into your tools, look into your processes. Imagine a world without this data. Does the process break down? Are you no longer able to triage according to policy? Then we need to begin to adapt these things so that we can defend accordingly. Like many things of late, if we can't trust that something will be there in a way that we can rely on, we're going to make other plans that don't take on that dependency. What a theme to have bumped into here in 2025. From a fundraising perspective, we saw a counterintuitively large week, totaling more than $32 billion in newly committed capital last week, including $4.6 billion from Founders Fund for their third growth equity fund, busting through their target of $3 billion, so it's a pretty significant increase in terms of being oversubscribed to that funding round. $5.4 billion from Linden Capital Partners for their sixth healthcare-focused buyout fund, $2.3 billion from Morgan Stanley Investment Management for their third PE co-investment fund, and last but not least, EQT secured $10 billion in commitments for its ninth Pan-Asian buyout fund. But at the same time, the Financial Times is reporting that China is pulling back from U.S. private equity investments, which is not small news considering how the FT frames it. Quote, These Chinese funds, these state-backed funds, are among the world's biggest investors in alternative assets. In 2023, CIC and SAFE each had about a quarter of their respective $1.35 trillion and $1 trillion of assets invested in alternatives, according to data provider and consultancy firm Global SWF. Now, not all of these will be in private equity investments, but that is more than $580 billion worth of capital in these alternatives, many of which are private equity backed. So, interesting to see that pullback, obviously in response to some of the larger macro environments. At the same time, the FT ran another headline in the week that read, quote, private equity goes risk off as it pauses deal making, unquote, due to economic uncertainty unleashed by U.S. tariffs. The Wall Street Journal wrote a piece, a very similar article, with its headline being Private Equity World Engulfed by Perfect Storm, closing with a quote that read, quote, we already thought 2025 was going to be a challenging year for distributions. It's going to be even harder than we thought. With that, I think it's time to get back to work. A reminder, you can find links to all the articles we covered, including those summary items, down below. You can find back issues and written transcripts of these videos at intentionalcyber.com, and we will see you next week for another edition of the Intentional Brief.